Hey guys, welcome back to the channel. We meet again on another emergency update because things have started to get really, really ugly today. And I just wanted to really bring you a video to sort of break down what has happened and what we're expecting from here. So as we can see, just looking at the 1 hour charts on Bitcoin, obviously we're going down the time frames here just so we can capture what's gone on over the last couple of days. Obviously, we came off yesterday during the FOMC. We were able to sort of hold yesterday evening at sort of around 100k, like above 100k. We came down to like 99. Then obviously on the morning stream today, we looked okay. We looked like we were getting a bounce. We found support at the area that we wanted to, but later on today, after the US Open, obviously we came down. I predict there's probably been quite a lot of ETF selling, which has driven this market down over the last day. We probably see some big, big outflows today. Big outflows have been sort of footprints of the ETFs sort of either bottoming out when they've seen large outflows, alternatively when they've seen large inflows. That's often called tops. So potentially, if we do get a large outflow, that could be a signal that actually we are bottoming out. I know I'm clutching at straws here, but I'm trying to give you some sort of hopium to sort of keep this bull market alive right now. I mean, if we're looking at hopium, then we can see we are still in the uptrend. We have still made a sort of higher low as things stand, but obviously if we go much lower than here, things are going to start to get really ugly. I was looking at the liquidations. We're starting to see some liquidations now build up below price. This is just over the last 24 hours. So it might be that the market maker wants to come and take us down to about 95,000. If we look at the chart here, just below price at 95,000, we've got this descending trend line, which was previous resistance. We then sort of struggled to get through. We held it as support. We came below it a couple of times, and then when we actually sort of started to close back above it, we then sort of broke out and started to go higher. So potentially we might come into contact with this trend line and start to play around here again, potentially coming a bit under it, a bit over it. But potentially that could be a signal if we do come below this, that when we get above it again, we might then start to mark up a little bit quicker. And we've also got this descending diagonal as well. So a couple of trend lines coming into play soon with the 786 Fibonacci, with the previous lows. So really, you want to see this area hold its support. After that, then it looks like we're probably going down to test sort of 90, 91,000. And again, just looking at liquidations, if we actually look at the weekly, so taking a slightly sort of longer term view on the liquidations here, we can see not much on the downside. Most of the liquidity's built up on the upside in terms of the 1 week. And if we actually just go to the 1 month, I think I saw on the 1 month there was a bit of liquidity sat down at 90,000. So we've got some here. Yeah, we've got some liquidity here down at 90,000. So potentially the market maker might want to, off the back of this, reversal in sentiment, might want to take us down here first, and potentially we see sort of price run into the high 80s, then put in a bit more of a bounce and hopefully a low of this correction. And then, like I say, more liquidity is on the upside. I think it'd be very, very hard to get us down all the way here to sort of 75,000. I don't think that is on the table right now. I think we probably need a black swan or some really, really negative news to actually drive us down that far. Personally, obviously it can happen, but if we just look at the pullback, actually measuring out the pullback from sort of the high now to where we are, we have now hit sort of double digits, so one about a 12% pullback so far. And if we're to go down to sort of like the low 90s, high 80s, I mean, down to sort of this sort of level here, this support here is going to be about a 15% pullback. And obviously, if we're to do 20% pullback, then we'd be looking at sort of like the mid 80s, around about 86. I'm not expecting that to happen personally. I don't actually think we will trade below the low for December. I still think we will sort of grind things out from here, maybe wick a little bit lower, flush a little bit lower, down to around about sort of 94, 94 and a half thousand. and start to bounce back up. So that is probably my sort of best case scenario for the price. Obviously, the low of December is here at let's just get that right, sort of 92,000. So do we come under that low? Like I said, at the moment, I think that's unlikely. Let's take one level at a time. Obviously, it's been a very sort of difficult day for anybody that's been leverage trading here. So alts have been absolutely cremated. But yeah, I think probably the worst case scenario that I can see right here, given the way the market is probably a move down to around about 90,000. If things get really ugly, potentially all the way down to 85. And like we said, at 85,000, let's try and get that actually on the high. So coming down to 85,000 would be your 20%. So I think that would be the absolute worst case scenario. We've got kind of like 94, 95,000 being the next level, then 90,000, and obviously sort of things like the monthly lows. And then we'd be looking at like 85. And this would be an absolute like massive outlier, by the way. If we did come down and take out December lows and even get as low as 90,000, that would be a massive outlier. Obviously, it'd be a red month for December, which would be very strange in a halving year. It would also, yeah, really probably push the cycle back a bit as well, because obviously there would need to be market structure. We need to like obviously rebuild. Price will probably need to consolidate for a while, and we probably see a bit more chop going into January time. But just kind of bear in mind that usually we see these, especially in bull markets, we see recoveries fairly quickly in bull runs when it comes to pullbacks and corrections. So obviously, this is really before Bitcoin got into new all-time highs and to new price discovery. So really, if we look at the prior bull run when Bitcoin got above sort of 20,000, went into price discovery, this was the first major pullback we have, or we had, should I say, sort of multi-week pullback. And obviously it lasted just a couple of weeks from high to low, and it was 31% total pullback. I don't think we'll see 31%. I definitely think 25% is on the card. So like I say, maybe a pullback down to 85. So that took 2 weeks. This one was literally over within a week, 26%. We can look at this one here as well, which was obviously 2 weeks, and that was 23%. So you can get the picture here. They don't tend to last that long. Like I say, right now, this would be you know, the first week. So potentially we get a second week, and like I say, potentially, I mean, 25% takes us down to 80,000. So yeah, 20% would be 85. I think 20%, 25% probably absolute worst case scenario then. But I think this will happen fairly quickly. And I'd say, like I say, if we're coming off again next week, probably the week of the 30th of December, that would be the week that I would think this would bottom out, if we do continue to sell off again next week. So yeah, that's really it on Bitcoin. So things are looking, like I say, fairly curious here. Really need to put in a bit of a bounce and try and sort of stay above this 618. Right now, we are at the 618 level from the late November swing low to December swing high. So I'd be a bit more encouraged if we can reclaim this 618. So call it sort of 97,500. If we can close the day above 97,500. Obviously, this is fairly sort of like sort of key level in here. But now, if we close back within this, so anything below sort of 98, it looks like we're going to probably close below 98 here. We will probably chop then between 98 and 94. So like I say, I think if you're looking to enter, well, if you're already in positions, I'd definitely hold them right now. I wouldn't be selling into a dip like this. I think the time for selling is probably gone. If you're going to sell or de-risk, you probably had to get out earlier on today on the first bounce. I think if you're looking to deploy, I mean, I've already deployed. I've got a tiny bit held back, and I'll probably hold off deploying that in case we see this sort of 94,500. If we come down there on Bitcoin, I'll probably start to deploy again, looking for reaction. If there's a reaction, then I'll probably go fully in. If not, I'll be waiting for maybe 91 and just playing this level by level, really. Obviously, trying to keep as much back as I can, just in case the worst case transpires. Ethereum's been really, really hit, like seriously hit hard. So if we're looking at Ethereum right here in terms of what we've done as a pullback already, you can see we're looking at nearly 20%, basically 19% so far on Ethereum. Does Ethereum come down a little bit lower as with Bitcoin? Do we actually come into 786? It looks likely now. It looks very likely. And then just kind of sort of zooming out a little bit, we can see that we've got this zero point 0.5 here from, which is the full extension, full range from the move from January all the way up until sort of where we are here in terms of the low from last year's January low and the August low, sorry. So that's basically the full yearly range. The midpoint of the full yearly range for Ethereum is 3,100. So, if Bitcoin does come down to 94,000, maybe we get down to this 786 and see a reaction there. Like it looks like quite a bouncy area. We've seen some wicks down to this before. If we do go for another leg lower on Bitcoin, i.e. down to 90,000, potentially Ethereum comes back down to its midpoint at zero point 0.5. So, we've got to discuss these levels. These levels are now on the table. Solana also having a complete battering. Just to say on Ethereum, by the way, just looking at what that would be in terms of from sort of high to low, if we were to come all the way down to that level, then yeah, if we were to come down to the 786, we're looking at a 20%. If we come all the way back down to the midpoint, we're looking at about 25% pullback for Ethereum. And like we say, Ethereum in previous bull markets, if we just look at the last bull run for Ethereum, then obviously it's on here. Ethereum still trading within its bull market high from the last bull market, as opposed to Bitcoin. I mean, if we're looking at things like when Ethereum broke to all-time highs, obviously it came back and it retested. It hasn't even broken to all-time highs yet. But if we look at what that first dip was, it was 36%. Obviously, it was a very sharp, fast correction. If we look at the pullback when it challenged the all-time highs, that's about 20, 27, 28% correction. So that was pre-breakout from all-time high. And you'd probably say we're more at a stage like this as opposed to being sort of overly overextended. So because Ethereum hasn't yet broken out from its all-time high and it's just retesting its cycle highs. So I think maybe a 26, 27% dip would be more likely. Obviously, that brings us in just below this zero point 0.5. That takes us pretty close to the zero point 0.5 level, this 2,778 for the entire cycle low to cycle high. So it's basically coming in here. That'd be about 30% if we got there. I think that is the absolute worst case scenario for Ethereum. By the way, if we were to come down there, we've also got this ascending trend line, which would start to come into play and probably support us if we were to dip down. Mind you, that's still a fair bit below. I mean, if we did come down sort of right at the start of next month, then that'd be 2,600. But I think we'll see support coming in between 2,800, 2,850. That's the 618 from sort of the current sort of cycle low to cycle high. Um, and then what else was I looking at? Yeah, I think we would likely find some support around here. But obviously, this zero point 0.5 at 3,100 is pretty significant. Two, just want to go back Yes, what are we doing here? That's actually uh, not so relevant now. I can mess with these charts. I've got too much on here. I will definitely give these a good clean later on. But yeah, I just want to make sure I've got these levels right. So we can pretty much take that off. That's no longer relevant. So sorry, the zero point 0.5 level, if we go from sort of bear market low, current high, yeah, that would be coming in right down to where we were in the summer. So it's going to be best to go with this here from obviously summer low to current high, and the midpoint is coming in around about sort of 3,100. So potentially we get there as a target if Bitcoin sort of has another leg down. I think Bitcoin will need to get down to around 90,000 to initiate a move down to that level. But like I say, that's definitely possible at the moment with the way things are going. And like I say, just back up to Solana, and Solana really retesting now some support. Obviously, 180 to 190 was resistance over the summer. We struggled to get above that level, and we've just come back down and we've retested it. So obviously, previous resistance here, now we've flipped to support as Solana getting back above its descending trend line here. So I'd like to see Solana get back above $200 really as soon as possible, and it will be looking a bit healthier when that happens. Really, we want to see Solana trading above $200. We don't really want it coming below sort of this horizontal here for too long. So Pepe as well. Pepe's coming to retest its previous all-time high, like making a proper retest this time. And like I say, this is an area to pick up Pepe. I have added some more Pepe here. Obviously, if markets continue to break down, Pepe might get one more leg down to around, I'd say maybe sort of the 12s on here as a worst case scenario on Pepe. Well, worst case scenario, I mean, it could come much lower, much lower. But I'd like to think the markets will see some strength before then. Like I say, altcoins have been really hammered. Pepe from here is currently on a, I mean, 40% retracement. If we came down further, looking at over 50%. I mean, for what is a large cap meme, like a meme that has had like an $11 billion valuation, that is a huge move, huge move. And I can't see how buyers won't be interested in picking up Pepe anywhere these prices or lower. So yeah, I think buyers do step into this market really soon. Obviously, dollar having a strong day, pushing up again. So this is obviously putting cryptos under some pressure. Like I say, I expect it to probably run on here to the next sort of target, which would be the 618 coming in around about 108.9. So we've got another zero point 0.6 to go on the dollar for it to maybe find some resistance. And the S&P, I mean, it's not really gone any lower today, but it sort of did have a bounce at the open, and then that got sold into, and it's closed quite weak. So has the Nasdaq. So stock market's still pretty weak here, trying to digest that FOMC news. So just back over to Bitcoin then. Let's go back with this chart and let's switch back down to the 4 hour. So Bitcoin trying to put in a bounce here. As I said, I really want to see 97.5 reclaimed by the end of the day. We're battling to do that right now. And then if we can get back above 98 and higher, then we might avoid rolling over to sort of 94. Otherwise, I think a rollover to 94 is looking fairly inevitable. Let's just put a box in here so we can see what the next levels will be. So it'll be 94. Failing that, I think we're likely going to come down to around this level, around about sort of 90, 91. So these are next targets on Bitcoin. Like I say, worst case, we've got sort of 85, 80 if things get super ugly, but I don't think we'll get down there without more of a catalyst, to be honest with you. If we, I mean, it's possible we make a massive wick down there, but I think this market is more mature than it used to be, and for that reason, I think the volatility is probably going to be less. And like I say, If 85 is a 20% drawdown, then I think that is probably sufficient at this point in the market cycle. But like I say, 15% down to 91 would also make sense. So let's see where we go from here. Obviously, if we do flip bearish, then both of these targets are on the table, i.e., if we don't get a decent close on the CME futures tomorrow and a decent sort of close to the end of the week, then closing the week anyway around here, I think really would open up the door to another sort of push lower to try and put some sort of reversal in. So yeah, they're the targets on Bitcoin. Like I say, Ethereum, potentially we can get a bit of a bounce from here. If not, we're looking at the 786, which is a little bit lower. And from after that, we're looking at this sort of zero point 0.5 from the entire sort of yearly swing low to swing high. So Ethereum, sorry, Solana again as well. So I think we're pretty much at the main support here. I'd want to see this close above here. Like I say, with Solana being at such critical support, I think this gives some sort of hope to us finding a bit of a bounce. But if not, I've got these ascending trend lines and obviously these highs. And it seems pretty obvious to me that Solana, if it loses this level and it comes back beneath this descending trend line and back within its range, it would probably come down to around about like 161 at a minimum. So obviously that is the risk if Bitcoin and Ethereum sort of break down to their lower targets. Solana probably comes down there too. So where was I? Yeah, I'm going to wrap it up there. Thank you for watching. Obviously, if you're on leverage, stay safe out there. If you're buying spot, I think now's probably a decent time to start to nibble into the market. I don't think this will be too long-lived. I think we've probably got a 1 to 2 week correction on our hands. That means we might have already put in a bottom. We might put in a bottom tomorrow. If not, the bottom could come next week. I don't really see it going on much longer than that. It's like if we look at where we are right now, then yeah, basically we've got another, where are we? So next week will be weekend in the 28th, week after weekend in 4th of January. Like I say, early January, FTX repayments are looking to get made. I think might be, is it the start of next week, maybe the 23rd, that MicroStrategy are going to be in the NASDAQ as well. We've got Trump coming into office next month as well. We have a lot of bullish catalysts out there that are going to be coming thick and fast over the next few weeks. So I think for that reason, you know, we've probably seen the worst of this move in terms of the FOMC sort of knee-jerk response. And yeah, for me anyway, it's just about survival mode for the next couple of weeks, and then I think we'll be sort of back to sort of resuming our bullish market. Let's hope anyway. But I'll be with you every step of the way. Like I say, back tomorrow morning with the GM stream. So we'll see where we are after tonight, and obviously we'll assess things from there and go from there. All right. Have a lovely evening. Talk to you all again soon. GM.